Good morning. Today is Monday, December the 12th. The time right now is just after 10 o'clock, 10:18 in the morning. And just a recap of what happened on Wall Street on Friday. Basically, the market has been coming down since it hit a top. As far as the Dow Jones is concerned, the Dow Jones has possibly hit a temporary top at 34,595. That was on December the 1st, the first day of December. The market has been since been trading to the downside, and of course, Friday we see that the market closed on the near the low of the day. So we can see that by and large, we can see that the market is probably heading lower. The immediate target is 32,800 to 32,400 levels. And if we get a rebound, I think somewhere between 33,870 to 34,000 seems to be the cap. So if there's going to be a rebound, I think this is possibly the only level in which you can actually attempt to short. So I'm also looking for a short position in the S&P 500. So hopefully we can get there. Last week I missed out the market trading to my original level. After that I shift higher, so I missed the downside on Friday. So hopefully I will get another chance going into today's trading. So I'm a little bit biased on the short term to the downside. So again, my Dow Jones target in the meantime is 32,800 levels. So hopefully the market can actually drift all the way there. And of course, this week we have the FOMC meeting, and that will be on December the 14th, and our time will be Wednesday. It's going to be announcing the rate decision at 3 a.m. in the morning. Not sure any one of you will be staying up so late to watch, but I think it will be worth your while to want to watch this, because this is the most anticipated FOMC meeting, because this is the last one for the year. Market is more or less prepared for a 50 basis point rate hike, because 2 weeks ago the Fed chairman has actually messaged this idea to us that he's looking to slow down the rate of the rate hikes. But still, having said that, he is also maintaining the idea that the Federal Reserve is likely to continue to hike rates longer and for a longer period of time. So there is no mention of a pivot, meaning to say of a rate cut. But the market has been hoping that there is going to be a pivot. That's why we saw the market rally so aggressively from the beginning of October all the way to the first day of December. And this has been ongoing for two months, almost 2 months. And we see that at the beginning of this month, the market seems to have peaked and is now coming back. And this could actually be the case going forward. At the very most, maybe we have one last hooray rally. Like I mentioned many times before, typically at the year end, we have a Christmas Santa Claus rally, and that may happen somewhere beginning middle of this week and all the way to the Christmas, okay, which is going to be 2 weeks away. Okay, so that may or may not happen, so we have to watch the market as it unfolds. But for a time being, I think the market wants to come down, and my target is 32,800 at least. Okay, in the S&P 500, like I mentioned, originally I actually placed my order to sell at just below the 39,780 but I for some reason I actually shift my order, because if I have not shift my order, I would have already been short. But then maybe for the market may give me another chance if we have a very minor 3-wave rally here, go up to just about 4,000 level. That would be fantastic, because that will give, this is my current working order. I'm working to sell at 4,006. Hopefully the market can do a minor 3-wave rally into 4,000 and then come back down. So my immediate target is about 3,795. So this will be my immediate target, and we will see what happens after that. Okay, like I said, if this happens before the FOMC meeting, that'll be great. And then I will probably stay flat and see what happens after that. Okay. Over in the Nasdaq has not been able to go up very aggressively, unlike the S&P 500 or even the Dow Jones. We can see this 3-wave rebound from the October low of 10,440 can only do 12,115, and then it has basically hit its top, and it's been coming down. So the market top side, I think we already have a minor test of 11,693, and if we get another 3-wave bounce back into this area, I think we can basically position a short somewhere between 11,700 to 11,780. So this will be quite a nice level to go in to take up a a short, aiming for at least a test of 11,000. That's for the near term itself. Okay. Over in Asia, we can see that Hang Seng actually opened the market a bit soft this morning. High was just below the 20,000 levels traded on Friday, and this has also confirmed the idea that the market has done a three-wave rebound, and it's very dangerous right now because the fact that it just cannot cross over the 20,000 levels and start to fall. And if my medium short-term outlook is down for Wall Street, that means to say that the downside is actually more pronounced, and to be careful on the downside. In so long as this medium-term support line is not taken out in any aggressive manner, there is still the possibility of another unfolding pattern, which we will have to see what else, because the minimum has been done. Okay, that means that the upside potential has become very reduced. In fact, it has almost been gone. So we need to see some kind of new impetus to excite the market on the upside. Okay, so that can only happen maybe during the FOMC or post FOMC, which is middle of the week. So from now until FOMC on Wednesday, we have to see, we are likely to see more downside than upside. Okay. Over in the Shanghai Composite Index, we can see the market was also a bit soft, but it came down from Friday closing. So we can see that there's a gap down based on Friday closing. So the market also did a three-wave rebound, and it has already more or less hit my target. My original target was 3,226 to 3,281 in the Shanghai Composite Index, and it came very, very close. And this does give us the idea very similar to the Hang Seng. Maybe the market has already hit its target and now it's trying to pull back. And the same thing that we are watching on the Hang Seng is also applicable in the Shanghai Composite Index, meaning to say that the near-term support line need to hold. Okay, and if we can hold, then maybe there is a new corrective pattern, maybe a more complex corrective pattern may unfold. So until then, we will have to take it very cautiously. Over in the Nikkei 225, you can see that the market actually opened on the gap down and it has been trading lower. The market actually was trading just above the 28,000 levels, and now the market opened and then come down. So it has also done a three-wave pullback, but the thing that's different between the Hang Seng or even the Shanghai Composite Index relative to the Nikkei 225 is that it has already taken out the near-term support level. Okay, so the fact that it has taken the near-term support and still seems that market doesn't want to go up yet does give rise to the idea that maybe a more complex pattern may be unfolding. Maybe the market will go down and take out the 27,415, which is does last week. So we will have to see how the pattern unfolds. But if Wall Street is likely to stay soft at least until Wednesday, then maybe it will also follow through as well. Okay. Over in currency market, we can see signs of dollar strength. Okay, we can see that this is the 4 hours time frame. We can see that the high traded in recent memories on December the 7th was 137.85, and the market this morning took out a very, very minor channel to the upside. And then if the market can take out this level at 137.85, maybe it will be gunning for the 140 levels, which is very, very close to this level at 139.89. Okay, so near term, I think the market may challenge this level. So if that's the case, then this is a three-wave rebound. Okay, so near term, I think I'm a little bit bullish on the dollar for the three-wave rebound scenario. And that being the case, if the dollar wants to go up, it means that the other major currencies is also likely to trade to the downside. And we can see that the sterling pound actually had a high at 123.44 on last Wednesday. And if the dollar wants to rebound three waves to the upside, then sterling and euro is also likely to come down in the three-wave decline. So if this is the case, if it's a simple three-wave, then it's all well and good. Okay, that means it will trade below 121, and then maybe it will hold and then have a new pattern. But the fact that right now there is also a near-term support line to consider, market is currently sitting on it itself. So the key will be in London. London opens at 3 p.m. in the afternoon, and we'll see how London will take this currency pair. If it goes below 121, I think the market is going to go all the way and perhaps challenge the 11780 levels, 1.1780 levels, which is within this bracket of prices between 1.170 to 1.1850. So do watch out for the possibility market will go into this bracket of prices. Okay, I'm already short, so I'm just holding on to my position. I'm keeping my stop just above the 123.44 levels. Over in euro, I'm also short the euro versus the dollar itself. Very similar pattern than what we see in sterling. The market is currently hugging this near-term support line, and it may actually break during the London session. And if the market breaks a 144 104.40 levels, which is this level over here, last traded on December the 7th, then maybe the market will go down all the way to test a 102. Okay, 102.22 was a low that was traded on December 21st, November 21st. So this is the near-term outlook. If the market falls back, I think it will be also in line with the dollar strength. The dollar strength can also be seen in the dollar versus Canadian dollars. You can see that the market is trying to do a three-wave rebound. And if this is the case, currently the market is capped at 137. If the market takes out 137, I think top side will be 138. Okay, 138 is also very close to the November high of 138.08. So this is the immediate target for the dollar versus the Canadian dollar. So by and large, the dollar wants to go up. So trade I will more interested to trade the dollar rebound story for now. Okay. Over in the crude oil market, we can see the market actually crashed to the lowest level this year at $70.08. This is the lowest it have ever been. But now we are beginning to see signs of technical oversold. The mini market has been coming down too fast, too soon, and now there is the danger of a reversal. So do watch out for a rebound in the crude oil prices, especially the market take out the $73 per barrel price range, and this will see maybe the follow through buying or profit taking from those people who have been selling, and the immediate target will be this resistance line over here. So depending on where the market when it starts to rebound, the longer it takes to rebound, the lower the target, because this is a sloping resistance line. So the earlier it rebound, the higher will be the target. So we have to see, I think somewhere about $76, okay, will be the immediate target. Over in gold itself, you can see that gold is also struggling. After hitting a high of $1,810 on last Monday, the market seems to be struggling. There was this attempt last Friday to actually challenge this level, but the highest it ever did was $1,806, and then that's it. Then today we can see market is softening, and this give rise to the idea the market will do a three-wave, and very likely, if the market continues to trade below $1,750, maybe it will gun a bit lower, okay, perhaps to challenge this low that is traded on November 23rd at 1,725, or somewhere within this bracket of prices between 1,715 to 1,732 levels. So again, this bracket of prices, they are very, very much in line with this low that we saw on December 23rd, okay? No, November 23rd. So there is this possibility the market may come down. I'm really short gold for that possibility of a pullback, okay? So my stop is just above $1,810. Over in silver, silver is a lot more bullish. You can see that last Friday, the market have a different structure from gold. Silver has been trading higher and higher to $23.68. And then you can see that market now is currently pulling back. If gold prices wants to pull back, there's a possibility it may drag silver along with it. And I think a pullback to test the near-term support line or to this level at $22.05 is a possibility. So do watch out for a potential pullback. If the market can pull back to $22, it does give rise to the idea that perhaps going back long again will be an idea. But of course, we had to be dependent on a confirmation of a reversal pattern in the candlesticks. Okay, currently there is none. Over in crypto space, we can see that prices are also falling back down. After achieving a low on November 22nd at 15,480 levels, we can see market rebound to 17,425. And this is a three-wave rebound, and it has hit my target range. Okay, so now the market is struggling, and it does seem that it may come back down again because the market has taken out in a support line. Okay, so basically I think the risk on market going back to 16,000 is a possibility. So do watch out for any eventual pullback to 16,000 in the Bitcoin. Ethereum is also showing the same signal. We have a three-wave rebound back to 1,308. My target was 1,307. So it actually hit my target and now it's struggling. So there's a possibility it may grind lower to $1,200. Okay, so this is the immediate target. Over at Ripple, we can see that the price action has been contracting quite considerably because there is still no verdict as to the outcome of the SEC versus the Ripple Lab. People were trying to see if they can come to a resolution fund, because this is hanging over the market for far too long. And in the absence of any news, I think the market will slowly grind lower, perhaps to 0.36 cents to 0.35 cents. So basically, we have to see if the market will grind lower. Okay. Over at Binance Coin, I think this is a coin that's showing a lot of promise because we have a very, very sharp rally from $250 there about to $317.60, followed by a very, very grinding, slow developing pullback, and this pullback may see prices going down to $275. If that's the case, I think somewhere between $267.50 to $275.60, that level actually do present a great buying levels. Okay, and then putting the stop just below 249. I think that will be a good trade because I think that may see the market goes back up to maybe test the 350 levels. We will adjust this level as the market bottoms out. Once the market bottoms out and is starting to reverse, then we will be able to estimate what is the target range. But somewhere between 350, I think is quite achievable. Okay. Dogecoin do not have any particular move. Market right now has pulled back. You can see the low of 0.716. We saw a rally all the way down to up to 0.1119, and now the market is pulled back to 50%. Now, in the normal market that has no mitigating factor, 50% is a very technical level in which market should be able to hold in a strong rally. So the market we have a reasonably strong rally. So we have a 3-wave pullback. Now it's 50%. However, we will have to see because the other coins are also beginning to show sign of weakness, especially in Bitcoin, Ethereum. If that's the case, then maybe it will pull down the Dogecoin levels. Okay, so for the time being, we have to watch this. I have no particular view on Dogecoins for now. And this is all I can have for you for today. Tomorrow I'll be traveling. I will do a very early morning update, and then I'll be on my way to Hong Kong, in which I'll be participating in an expo organized by Wiki Finance in Hong Kong near the airport at the Asia World Expo. So if you're in Hong Kong, do drop by. The event is on December 16 to 17. It's a free event. Anybody can walk in, and I'll be present on stage. Okay, so for the 2 days, I'll be there. So until then, I'll see you again. Next update tomorrow morning, very early. Okay. In the meantime, take care. Bye-bye.